Remain seated as we are now about to begin with our plenary session number 4. All the delegates and members, I request you to take your seats. Make sure that your electronic gadgets are either at a silent mode or a switched off mode. On behalf of the entire ICAI fraternity, I once again welcome you all to the Global Professional Accountant Convention, GloPAC 2023. We will now be starting with our plenary session number 4, which is on the topic Elevating Assurance Quality, Regulators and Practitioners' Insights, where we will be discussing the importance of elevating assurance quality and would be discussing both the regulators and practitioners' perspective on strategies for achieving higher standards of auditing and assurance. It is very important for us to harness the knowledge as we learn to grow and work better. With that, I would also be telling about our eminent speakers that we have who will be joining us virtually. We have with us Mr. Debashis Panda, the Chairman of the Insurance Regulatory and Development Authority of India, IRDA. Can we have a great round of applause, please? I would be requesting our AV team to please make him join virtually. We also have with us Mr. Mohan Johri, who's the Deputy Controller and Auditor General, and is overall responsibility for auditing all direct and indirect taxes of Union government. Can we have a great round of applause, please? I would also be inviting on stage our Central Council member, CA Dr. Sanjeev Kumar Singhal. And with that, now that our panelists have joined us virtually, I would be requesting CA Dr. Sanjeev Kumar Singhal, sir, to kindly give the opening remarks to this session. Can we have a great round of applause, please?
It's indeed a pleasure to be here for giving the opening remarks of a very important session on elevating the assurance quality, regulators and practitioners' perspective. And we have two very eminent regulators on the screen, the IRDA, in fact, none other than the chairman IRDA, so Debashis Panda, and our own very own chartered accountant, Mohan Johri, who is the deputy C&AG, looking at the entire union government, direct taxes and indirect taxes. I'll give the practitioner's perspective in this regard, and then we will hear from our two eminent panelists on the regulator's perspective. Friends, the purpose of an audit of financial statements is to enhance the degree of confidence of the intended users in the financial statements. This is achieved by expression of an opinion, and all of us know it as an auditor report, by the auditor on whether the financial statements are prepared in all material respects in accordance with the applicable financial reporting framework. The audit of the financial statement does not relieve management of those charged with governance of those responsibilities. Audit quality these days is talked the most. In fact, if you look at the Honorable Vice President of India, he also mentioned about the role and the responsibilities of the chartered accountants. Audit quality is at the center stage. It is crucial for maintaining the integrity and reliability of financial information. Audit quality ensures that the financial statements are free from material misstatements and provide a true and fair view of an organization's financial position. And in fact, there are many stakeholders in the financial statements, for example, investors and shareholders, management, regulators, government and tax authorities, creditors and lenders, and general public. In fact, as practitioner, we always hear from our practitioner that there are a number of challenges which the practitioners face. And, we really need to respect those challenges while formulating law. In fact, it's a matter of great honor that our own council member, C. Vishalbhai Doshi, is now a board member of the International Auditing and Standard Board. And I'm sure that he'll be taking the India perspective, the challenges that our practitioners face to the international level as well. In fact, these days, if you look at the increasing complexities of the elements of the financial statement, whether it is financial instruments or the business combination transactions or the consolidation, it's highly challenging for an auditor to understand those perspectives and the cross-industry references. And of course, there have been frequent changes in the law itself, in the accounting and the auditing requirements. And particularly if you look at the Indian reporting requirement, the enhanced report, which we know as CARO, CARO does not exist anywhere else in the world. And there are 50 clauses, sub-clauses and sub-sub-clauses in CARO. So in India, we have the most comprehensive reporting regime as compared to anywhere in the world. And there are tight deadlines, which all of us know. There are resource constraints as another important challenge that is faced by the auditors. And amidst all this, maintaining auditor independence and skepticism is crucial for audit quality. There are various challenges that an auditor has to meet, and the culture within an audit firm plays a very significant role in audit quality. Whether you are auditing an SME or a largest of the listed entity, the culture of the firm is very, very important. If a firm fosters a culture that prioritizes ethics, professional skepticism, and a commitment to quality, that firm will succeed in the long run. Adequate training and professional development are also very important for auditors to stay connected and to stay competent. Detecting fraud is always an issue where we talk of basically expectation gap. There is an expectation of a society that an auditor will work like a bloodhound, and there's a requirement of the auditing standard which talks about that an auditor is a watchdog. Where do both these meet? There is no fine balance. So one has to really look at what are the legal requirements and then understand the auditor's role in that respect. Auditors are required to give either a limited assurance or a reasonable assurance and not an absolute assurance. Nowhere in the world, auditors give an absolute assurance, and that is actually absolutely impossible as well. So the effectiveness of the audit quality is influenced by oversights provided by audit committees. Audit committees and the independent directors and the management have a very, very important role therein to play. Yes, the rapid advancement of technology has enabled the auditors to increase the sample size and in some cases check the whole population. The practitioner's perspective from the, if I have to speak on the audit quality, independence, one, I will always say that independence should exist both in letter and in spirit. Second is the competence. That's very, very important. Professional skepticism, again, is very important. Ethical behavior. The Honorable Vice President of India also mentioned about ethics. And now, our ethical standard board is having a relook at our code of ethics and redrafting it. But ethical behavior is non-negotiable in auditing. And clear and transparent communication is vital for an auditor. And of course, an auditor conveys his communication through the audit report. Adherence to the professional standard is again absolutely non-negotiable, and the firm's commitment to maintaining a culture of quality is very essential. And above all, we say, "Pehle likh fir de, bhool pade to bahi se le." So well-documented audit files are extremely important. If it is not documented, it is considered as not done. The Auditing Standard Board of the Institute of Chartered Accountant of India is basically playing a stellar role in the whole area of audit quality and has been keeping a good pace with the changes which are taking place in the international arena. In fact, in the next meeting, we are coming up with the bouquet of 7 standards pertaining to ISQM. We have been organizing the regular programs. In this year alone, AASB has organized 131 programs, which has benefited more than 77,000 members. We have been formulating the implementation guide on the various standards of auditing. We have been now constituting an expert panel on bank audit as well as on the financial statement audit and help thousands of members by addressing their queries free of cost. We have been formulating the technical literature, technical guide and FAQs. And now we have issued a technical guide on digital assurance and will be soon coming out with a framework around the digital assurance. We also issued an implementation guide on the world's first ever audit trail requirement, which has come to India. And in this year, we have issued 2 important publications. a checklist on standards on auditing and audit working paper templates, which will immensely helpful our practitioners. And the Center for Audit Quality, which is headed by my Vice Chairman in AASB, Vishal Doshi ji, he is also taking very important steps in the Center for Audit Quality in the direction of audit quality. He has come out with a certificate course on Executive Master's Program on the New Age Auditors. He's been doing programs from training for trainers on the audit quality aspects. He's launched a monthly webinar series called Quality Cafe. He has issued a publication on analysis of modified opinion, developed a digitized version of audit quality maturity model, and issued the significant audit matters, a compilation on the CAM and other aspects. The Excel tool on the materiality has also been released, and Excel utility and bank project audit was released, and recently a utility on engagement letters was released. So the institute is playing its role. Now it is on the members to ensure to deliberate on the subject of the role of the regulators on audit quality. Thank you, and over to you, sir.
Thank you so much, sir. Mr. Panda, are we audible to you?
Yes, good afternoon.
Yes, I request you to now address us all.
So good afternoon, ladies and gentlemen. I'd first of all extend my warm greetings to Mr. Aniket Taleti, the President of the ICAI, and other distinguished members of the fraternity of the Chartered Accountants present today. I stand before you today with the appreciation for the instrumental role that Chartered Accountants play in shaping the financial landscape of our nation. Your oversight, that oversight is a meticulous one, your financial acumen, the ethical grounding, all of these have been pillars of strength in our journey of economic development. Now, today, as we reflect on your contributions to nation building, I also wish to delve into the transformative journey that awaits you in the context of the ever-evolving and the tech-driven insurance sector. The chartered accountancy profession, marked by its commitment to precision and transparency, stands as a beacon of financial stewardship. You are not just number crunchers or auditors. You are the custodians of fiscal integrity, the architects of financial prudence. In boardrooms and audit rooms, your insights go beyond ledger entries. Rather, they resonate in the fundamental principles that uphold the stability of the institutions, which leads to strengthening the financial fabric of our nation. As financial architects, your meticulous analysis extend beyond mere compliances. They provide a compass guiding businesses towards sustainable growth. And thus, I reiterate, you play a pivotal role in shaping the strategic trajectory of businesses and, by extension, the nation's economic course. Now, the trust placed in chartered accountants is not merely a reflection of your professional expertise or accounting precision, but an acknowledgement of your commitment to ethical standards that transcend balance sheets. It resonates in the corridors of economic policy and financial governance. In the dynamic world of insurance, this commitment to precision takes on added significance. Now, as the insurance sector undergoes a profound transformation, also driven by rapid technological advancements, chartered accountants may not be just witnesses to change, rather would play an instrumental role in steering the course. The traditional paradigms of the insurance industry are giving way to data-driven decision-making processes, and your proficiency in interpreting and leveraging this data thus becomes paramount. Risk, a fundamental aspect of insurance, finds a natural ally in your expertise in risk management. The redefined role that awaits you in the insurance sector places you at the nexus of finance, technology, and risk mitigation. So your ability to navigate these interconnected realms will be crucial in ensuring the stability and resilience of insurance institutions, thereby safeguarding the financial security of our citizens. As we embrace the era of insurtech and fintech, the need for a broader skill sets becomes more apparent. I saw that the Institute has prepared a very interesting blend of topics for this global convention of chartered accountants, where importance of professionals like you in the digital transformation of the economy are highlighted. In this context, I would like to emphasize on the innumerable opportunities awaiting you in the insurance operations. The insurance sector in India is acknowledged to be the 10th largest globally, and going by the reports, it is poised to become the 6th largest by 2030. Now, demonstrating robust growth, the industry has maintained a compound annual growth, that is a CAGR of over 11%, and achieving a growth rate of 14% in the last financial year. Notably, the last year has seen the entry of 4 new insurance companies into the market, marking a significant development after a hiatus of 12 years in the life insurance sector and 5 years in the general insurance sector. This resurgence not only underscores the sector's inherent potential, but also reflects a renewed and heightened interest from investors. Now, continuous efforts are underway to further cultivate the insurance ecosystem with the objectives of encouraging innovation, enabling operational flexibility, and promoting a conducive business environment. Now, this involves enhancing ease of doing business, minimizing regulatory hurdles, and facilitating avenues for growth. Floating of a new insurance company has now become easier and a seamless process, with handholding of applicants by IRDAI officers, along with necessary guidance, a dynamic regulatory framework, and reduction of the TATs, that is the turnaround times for processing of applications. Insurers have also been empowered to introduce various products without waiting for prior regulatory nod, enabling them to launch the products promptly and meet the customer demands. Additionally, insurers can establish partnership with multiple distribution partners, a step towards facilitating open architecture in the distribution side. Moreover, empowerment, flexibility, and autonomy has been provided to the boards for taking operational decisions independently and by removing the redundant prior approvals. The expenditure of management limit is now applicable and monitored at the company level instead of the erstwhile segmental limits and sublimits. There is also absolute flexibility for payment of distribution commission within the overall EOM limit. The regulatory sandbox has been revamped to provide for more room for experimentation and breakthrough products and processes in the sector. Also, to make the industry future ready, mission mode teams at the IRDAI are working actively for implementation of the risk-based capital framework and the risk-based supervision framework. They are also actively engaged and involved to set our course for convergence to the international financial reporting standards and also adoption of technological advancements in the insurance sector. The investment arena has also been revamped to attract more investments into the sector, be it increase in the limits for FDI and the promoter status, staggered lock-in requirements, different modes of entry, raising of capital through other forms, etc., etc. Insurers now have enhanced opportunities for fund investments, such as they could invest in funds of AIFs, debt securities of the InvITs and REITs, increased exposure to the BFSI sector, resulting in better returns and better opportunities. It is noteworthy to emphasize here that the aggregate assets under management of the Indian insurance industry currently surpasses rupees 60 lakh crore. So your proficiency in investments, risk management, taxation, and portfolio management is essential in navigating and optimizing such a substantial assets under management. The returns generated on this AUM, the assets under management, constitute a significant component within the financial records of insurance companies. These returns not only contribute to the financial health of the insurers, but also play an important role in facilitating the effective fulfillment of their liabilities. Furthermore, the insurance sector is also getting ready to implement risk-based capital and Ind AS. This would enable insurers to efficiently utilize their capital and also ensure international consistency in accounting and reporting of transactions. The implementation of the risk-based capital is a paradigm shift in the insurance industry. It aligns capital requirements more closely with the risks faced by the insurers, fostering a more resilient and responsive financial sector. Chartered accountants, with their expertise in risk management, are well positioned to guide insurance entities through the intricacies of this transition, ensuring not only compliance, but also optimal risk management strategies. Simultaneously, the implementation of the Indian accounting standards, that is the Ind AS, which are converged standards of IFRS, in the insurance sector heralds a new era of international financial reporting consistency. As businesses operate in an increasingly globalized environment, having a standardized financial reporting framework is imperative. Chartered accountants, with their proficiency in financial reporting, have a crucial role ensuring a seamless transition to the Ind AS within the insurance sector. I see that Institute is offering certification courses towards specialization in this area. Insurance industry is also moving towards a principle-based architecture from the existing rule-based regime. This principle-based regulatory framework serves as a dynamic catalyst for insurance company, fostering flexibility and maneuverability. This would allow insurers to navigate through the complex viewpoints while responding to evolving market conditions with agility. However, this comes hand in hand with the responsibility placed on the shoulders of the boards. These governing bodies are entrusted with the task of ensuring that the inherent is wielded judiciously, aligning business strategies with regulatory compliance. In this delicate balance, boards play a pivotal role in shaping the trajectory of the insurance companies. And to effectively navigate through the details, boards turn to professionals like chartered accountants who become the linchpin in the quest for financial prudence, acting as the third eye that scrutinizes and ensures the soundness of financial decisions. And thus, I expect chartered accountants to play a crucial role in the revamped ecosystem in not only maintaining compliance, but also in providing strategic insights that would contribute to the overall fiscal health of the insurance companies. In essence, you would become the trusted allies of the boards, assisting them in steering the company through the dynamic regulatory environment, while also upholding the principles of financial responsibility and prudence. As the insurance sector stands on the brink of a technological revolution, the convergence of finance and technology opens up new vistas of opportunities. I firmly believe that chartered accountants, with their versatile skill set, can emerge as critical architects of this transformative journey. As part of our reform agenda, we are spearheading the development of Bima Trinity, the insurance trinity, envisioning a straightforward and comprehensive insurance product to be offered through a technologically driven platform known as Bima Sugam, which is currently in its conceptual stage. This platform is meticulously being designed to deliver a seamlessly and enjoyable customer experience throughout various stages of an insurance contract, spanning from sales and servicing to settlement. Your professional shrewdness, whether in insurance intermediation, financial advisory services, management services, not only aligns with this vision, but also creates abundant opportunities and avenues for innovation and growth. In this journey, embracing change becomes a key tenet for success. The traditional boundaries, the delineated roles in the insurance sectors are blurring, and a more collaborative approach is essential. Chartered accountants, with their ability to understand the complicated connections between finance and risk, are uniquely positioned to facilitate this collaboration. With this evolving landscape, ethical considerations remain the bedrock of the chartered accountancy profession. As the industry undergoes dynamic shifts, with technology intersecting with financial transactions, the significance of your commitment to integrity, transparency, and ethical conduct is heightened. In this context, the trust of the public in financial professionals becomes paramount. The adherence to ethical standards becomes the cornerstone upon which the credibility of the entire financial sector rests. As we navigate the changing outlooks of the insurance industry, the commitment to ethical conduct will not only enhance public trust, but also contribute to the sustained growth of the sector. Your role as a chartered accountant thus extends beyond mere financial transaction. It encompasses the shaping of the business decisions, the valuations that you provide, the balance sheets that you create, and the advisory services you offer are accepted by ministries, regulators, and other public officers at face value. Therefore, your responsibility is not only significant, but also focal. The trust placed in your work becomes the foundation for the broader trust in the financial sector. Moreover, the role of the chartered accountants in education and advocacy becomes even more central. As technological advancements outpace regulatory frameworks, your role in disseminating the knowledge and support the robust regulatory measures is paramount. It is not just about adapting to change, but also about actively participating in shaping the rules of engagement in the tech-driven space. Your ability to facilitate communication and understanding across diverse domains will be instrumental in fostering an atmosphere where innovation thrives, risks are managed, and the interest of all stakeholders are safeguarded. As we envision the future, it is essential to recognize the social impact of the insurance sector. Beyond the financial transactions and risk assessments, insurance plays a crucial role in societal resilience. Whether it is providing financial security to individuals and families or supporting businesses in times of crisis, the insurance sector, and by extension, chartered accountants in the sector, contribute to the social fabric of our nation. Your contribution towards financial stability in the insurance sector is not only a matter of economic prudence, but also a matter of social responsibility. As we navigate the complexities of the dynamic insurance sector, we must also recognize that the stability you can bring to the financial institutions you oversee translates directly into the stability of households and businesses across the nation. In the complex terrains of insurance, where fiduciary responsibilities and stakeholder interests intertwine, chartered accountants act as stewards of integrity. They contribute to the formulation and implementation of stringent financial controls, scrutinize the truth and fairness of financial reporting and disclosures. Additionally, chartered accountants lend their insight to risk management strategies, helping insurance companies navigate potential pitfalls and maintain a resilient financial stance. By fostering adherence to regulatory frameworks, chartered accountants help bolster corporate governance standards within the insurance sector, facilitating trust among stakeholders, which in turn can lead to long-term stability and growth of the sector. In conclusion, let us move forward hand in hand, embracing the challenges and opportunities presented by the evolving insurance ecosystem. The journey ahead is one of collaboration, innovation, and adaptability. Your proficiency in finance, coupled with a forward-looking mindset, will not only shape the path of the insurance industry, but will also contribute significantly to the nation's prosperity. As guardians of financial integrity, you are not just charting the financial health of corporations, you are the architects of a robust and resilient economy. Let us collectively build a future where financial security is not just a promise, but a reality for every citizen, upwards and onwards. Thank you very much. Namaskar. Someone take the start. Next speaker will start.
What do you?
A very good afternoon. Am I audible?
Yes, sir, you are.
Yes, sir, you're audible.
Well, dear members, a very good afternoon to all of you. It gives me immense pleasure to be amongst you once again. I would have liked to be personally there to address you, but due to personal and official commitments, it is not possible to do so. But hopefully, I'll convey my message to you through this particular address. Well, we live in an environment in which India is going to play a major role in the world economy. In fact, we have already touched the $4 trillion economy, and by the year 2047, we will be around $30 trillion economy. And in this whole journey, the private sector is going to play a very major role. And its role in the overall development of the infrastructure of the business activities is going to be very major. The next change which is happening is that the governance world over is rapidly moving towards e-governance for efficient and effective delivery of goods or services and instant feedback. And there is an increased dependence on the IT systems, and hence its reliability is of critical importance for the citizens. Any error or mistake can result in loss of faith in the system and can have severe monetary implications. There are increased instances of cyber frauds, mainly due to the fact that it can be carried out from any location across the globe, and there is very less coordination between the enforcement agencies for a meaningful redressal in different countries, basically due to different laws. So, this is the ground reality. And facing this ground reality, how do we position ourselves so that we are able to play our role to perfection? This is the challenge which all professionals have to face, and they will have to address it in a very, very effective manner. In fact, what is all regulation about? Meaning, although there is a lot of literature which is available in the public domain, and people would know, I happen to be very lucky in the sense that I studied regulation as a subject while doing my master's in Harvard Kennedy. And then I practiced the regulation when I was on the NAFRA board. And then as an auditor, I have seen the functioning of the regulatory bodies also, that how do they discharge their activities. So seeing it from three perspectives give me an idea about what regulation is all about. Well, basically, to put it in a layman's language, it is to protect the investor's interest and further public interest. So this is the, in one sentence, says it all. In fact, the accounts we make, or rather we audit, that is the only means of communication between the organization and the rest of the world. So if they are more meaningful, give you a correct picture, disclose what is required to be disclosed, then perhaps they have done their job. But if at any stage, whether at the preparation stage or at the auditing stage, the things are not done the way they should be done, then perhaps they will give a different picture altogether. So it is the responsibility of us professionals to see that when we are making those statements, we follow the accounting standards and policies in letter and spirit, and we disclose everything with the intention of giving a clear picture to the reader of the financial statements that what actually happened has been captured, and anyone who reads this statement will get a fair information about the performance of the entity as such. And as an auditor, we have an additional responsibility to see that people who have made those statements, they have followed the prescribed procedure, they've gone by the relevant standards, and they have done everything in compliance to those standards, and then make our report accordingly, so that when a reader gets a complete picture of the functioning of the organization, if that is missed out in some way, then perhaps the overall picture which is going to come is not going to be something which is very close to reality. Now, why regulation is important? someone might think that as in a profession we were doing good job. What was the need for all these bodies and authorities, and why should we regulate them? After all, it is a private sector, and and they are all professionals. But the fact is that regulation is something which is being done world over, in the sense that it all started with the Enron failure about 20-25 years back, when in US the law of PCAOB was formed, who were regulating. And in fact, then later on, it came out that the companies are becoming multinationals. And there are large stakes which are there for the investors, for the consumers, for the economy, for the country. So it is not something which is the sole business of the shareholders and the products and the consumers as such. It has wider public interest. And if it has to serve wider public interest, then perhaps there has to be a mechanism which can oversee that how public interest is safeguarded. And that is how regulation has come into picture. But then regulation also depends upon many things, meaning there are no two countries which can be compared and say that this is good or this is better or this is should be done in this particular manner, because regulation depends upon the level at which a country is, in the sense that the countries which are far more developed, or who have developed systems in which people behave in a more responsible and a disciplined manner, there the nature of regulation is going to be a different thing. But whereas a country which is a developing country, which is growing very fast, and which has ambitions of becoming developed country over a period of time, there the regulation has a different meaning. And then regulation, unlike the earlier regime, in which it was a rule based thing in which only compliance was resorted to, we have already come to the second level of regulation. In fact, if you ask me, regulation has got four stages, broad stages, in which it evolves over a period of time. In the first stage, we have regulation which is in the form of mere compliance. There is no interpretation involved. Everyone is asked to follow a set of rules. We had such things before 1991, like Monopolies and Restrictive Trade Practices Act or other things were there, in which whatever you were supposed to apply, and you get a permission, and then you are permitted to do that activity. But we have come out of that. We are liberalized. Private sector has come to play a major role. The second stage comes when we have got regulatory bodies. The Competition Commission is there, IBBI is there, NAFRA is there. These regulatory bodies see that in the private sector, the professionals are performing their duties, which is assigned to them in a very, very ethical manner, and which will contribute to an orderly development of the profession and would assist the country in meeting its overall objectives. So, this is the whole scenario. But when we move further, when we see that people will start behaving in a more responsible manner, that is when the third stage will come, where the sector wise regulation would be the order of the day. And then in the last stage, it would be a self regulation where every person will behave in a very responsible way and will have public interest in the core of their hearts. And that's the time when the regulation by the government or will not be required at that stage. But since we are in the second stage at the moment we are doing like we have regulatory bodies which ensure that there is a fair competition, things are followed more or less, and people who are not following the rules of the game, they are isolated. Some action is taken to them to so that they fall back. But why regulation is more important? I remember a statement which was done by the Harvard professor. He said that regulation is a very, very complex activity. The reason is that if you want to do something that is completely under your control, but in regulation, you interact with live things. And there is a need to see that whatever action you take, it gives the desired impact or the effect is commensurate. If not, then you have to come back to the table, see, retune your activities and see. So if the regulation has to be effective, then perhaps first step which it should do is to study the ground realities, that what is the extent of regulation required, what exactly we want to achieve, What is the most effective way of achieving it? Because if you regulate something too much, then you will be restricting the fair competition and things will not be done in an orderly manner. And people will find out ways of how to avoid it. So regulation should be sufficient enough so that you get the desired behavior also, and at the same time you do not regulate the business activity so much that its growth is impacted. So you have to study the ground realities first and see that what level of regulation would be the relevant thing for it. And then you have to be very clear that you know the ground realities well and you're constantly in touch with them. Then you make a suitable intervention in terms of what are the different requirements which are required to be met, which people are supposed to do. And then you have to have a mechanism of seeing that what is the impact of those intervention. Are the people coming towards the desired behavior or not? Or there are still instances in which people don't do the things which are required to be done. Then perhaps you will have to take steps accordingly, review it, and you will have to determine the extent and the timing of intervention so that it produces the desired impact. So these things are very, very important from the regulation. From the professional point of view, I would say from the practitioner's point of view, we should not be viewing as if regulation is trying to monitor them, trying to control them, trying to extract more effort from them in one way or the other. Meaning practitioners, if they have a broader outlook and see that if things are being regulated, then perhaps there would be a more systemic behavior from the different practitioners as such, and it will make their things easier in the long run. Because if certain practitioners do certain things and others do certain other things and get more business, then perhaps if the ethics is strong, the compliance is strong, then everyone will come to the same platter, and no person would do any such activities which would harm the interests of the profession in the long run. So this would help the practitioners also, that we have a healthy regulation. This will not only help the profession in the long run in to grow in an orderly manner, but to make meaningful contribution towards the economy as such. In fact, when I was involved with NAFRA, there were many cases which came to us, and we had an opportunity to see the details. The regulation also has an effect of, saying to the people that, look, that if things are being done in an orderly manner, it will go on smoothly. But if it is not so, then perhaps there is someone who is going to watch it and sort of see what is to be done, and maybe we will take necessary action. So these are the things which are there. Meaning, if we have a very good regulation which is in tune with the times, which suits the requirements of the situation, then it will be a win-win situation both for the regulators as well as the practitioners. But if it is not so, then perhaps, and when you see the country as a whole, the economy as a whole, the public interest in our mind, the investors' interest in mind, it'll be very difficult, because ultimately it's the trust which matters. So, and trust comes more with an effective regulatory mechanism. Now, what do we do? I see it this way, that although Institute has done a very good way in converging with the IFRS at the moment, they have developed certain new standards, they have made certain landmark efforts in other things also. But one thing which is very important is working papers standards. I have a feeling that working papers mean different to different people, in the sense that working papers for small businesses, small firms, for proprietorships means different things, whereas working papers for big companies, listed companies, and big firms means different things. When we are moving towards digitization, we are moving towards e-learning, we are moving towards e-filing, we are moving towards e-assessments, then why not we maintain our records in a e-manner? Perhaps what we need to do is define that what working papers mean, and then have softwares developed, and which meaning I can understand that small firms will not be able to sorry, will not be able to fund it, then institute can facilitate it based on whatever is to be done. This will help them that they pay a very minor fee and then go ahead and avail of these facilities. And when we are developing this software, the compliance and the regulatory requirements can be sort of made a part of it, which would result in automatic compliance. And whatever is required for compliance can be submitted to the regulators automatically. This would go a long run in meeting the compliance and the regulatory requirements to a great extent. Perhaps institute needs to take steps so that it becomes a reality. Thank you.
Thank you, Johri Saab. Thank you. You talked about audit working paper, documentation compliance software, which is, of course, very, very important. And you also mentioned that India would be a $30 trillion economy by 2047, and the focus on e-governance will be very high. I completely agree with you. Whether it will be 30 or 35 or 40 or 25, these are different numbers. But yes, the future is bright. There's absolutely no doubt about it. And Mr. Debashis Panda also mentioned about that the chartered accountants can play an instrumental role in the tech-driven insurance sector. He also emphasized on risk management as an area of practice for the chartered accountant. An insurance sector, which is today the 10th largest in the world, will become 6th by 2030. And if the IFRS or Ind AS are also adopted in the insurance sector, that may also help bring transparency. Of course, this could be with adequate modifications or the carve-outs which may happen. Thank you so much for providing the regulator's perspective, both Mr. Panda and C. Mohan Johri ji. We're indeed very grateful to both of you. And I'm sure that all the participants would have immensely benefited by your deliberations. Thank you very much.
Even I would like to extend my sincerest gratitude to both our speakers, Mr. Debashis Panda, sir, Mr. Mohan Johri, and our Central Council member, CA Dr. Sanjeev Kumar Singhal, sir. We thank you for your presence. As we finally reach the end of our session, we come to the realization that knowledge indeed has no end. We witness the information symphony that will undoubtedly add value to each of our professional lives. I thank you all for your participation in this session. Thank you so much.